Bitcoin is weakening, as are gold and the precious metals, or rather, silver too. The altcoins are also experiencing a slight pullback again, and government bonds remain at a very, very high peak. And with that, welcome to a new crypto update video. Yes, Bitcoin is weakening. The whole market is a bit weak right now because I think the data that came out yesterday was not really good, to be honest. Today, we have even more data coming our way. So today and tomorrow will be really interesting, especially since tomorrow, in the end, the Supreme Court will decide whether Trump's tariffs are illegal. So look forward to the next 2 days. Let's put everything into perspective now. But before we get started, as always, feel free to give the video a like and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram talk and Signal group. If there's any news, you'll always hear about it there first. If something happens, if I enter any trades or if I do anything else, you'll find out there. And if you're still looking for an exchange where you can trade everything we discuss here, feel free to check out my partner, sign up for the exchange BingX. There you can trade Forex, stocks, individual shares, and of course, crypto. Everything is possible there. So feel free to register using the link below in the video description. By doing so, you support the channel. And of course, you support me as well. And just a reminder, tonight at 7 p.m., as you know, there will be another live stream. So yeah, Bitcoin at $90,250. So in the end, exactly what we've been talking about for days has just happened. After we barely surpassed this high at around $94,700 and only had a wick above it, the turnaround to the downside has now taken place. Then here, if I zoom in a bit, we can also quickly switch to the 1 hour time frame. And again, we did not manage to break through here. We simply filled the vectors here to this extent. So in exactly where it dropped, the recovery to the upside came immediately. Vectors were filled literally to the dollar cent. And now it's going down again. Then yesterday, the JOLTS job openings were released. And they were really miserable. I mean, really, really miserable. The forecast was 7.6 million and the actual number was 7.14 million. So nearly 500,000. Job openings fewer than the forecast, over 300,000 less compared to the previous month. Compared to the previous month, that's not good. At the same time, though, if we look at the Purchasing Managers Index, okay, the numbers have gone up, but in my opinion, that doesn't really reflect the economy. The economy, that is. So we're getting significantly fewer jobs. Today, if we take a look at the economic calendar, which is just updating right now, so today, in the end, the productivity outside of agriculture is still on the agenda. Agriculture, the initial claims and continuing claims for unemployment benefits. And tomorrow, in my opinion, is the most important day of the week. Employment outside of agriculture, so non-farm payrolls, private employment, average hourly earnings, unemployment rate, unemployment quota, building permits. So tomorrow is jam-packed, plus there's also the story with Trump and the tariffs. So the market is currently preparing quite well for this news, or rather for what's coming. At the same time, or rather alarmingly, the funding rates are not going down. They are at a normal level, have gone down slightly, but not where we would ultimately want to see them when prices are falling. But so as not to make everything sound bearish, if we take a quick look at the order book, things actually look relatively good. So what I said a few days ago, that there was massive spot selling on the way up, we're currently seeing exactly the opposite. That means in the end, everything that's being sold off here now is being sold spot in the background again. So this whole rally that we had upwards here was sold off on spot. And now spot orders are slowly coming back in, which is a good sign. Even when we look at the heat map, we still have a bit of room to the downside, around $88,400 on the 7th daily view. Let's switch to the 24-hour view again, just to see if anything has changed there. So looking at the last 24 hours, we can see there's quite a lot of liquidity, clearly above us, but also this chunk at 88,000, or rather 86,000 US dollars. This means that in the short term, we still have selling pressure, at least for now, especially in this region around 88,000 US dollars. If we take a look at the vectors here during this period, or rather if we switch to the 4-hour chart, we can see there's still a slight vector down here, although it's already mostly filled. But the 200 SMA runs through here. What concerns me at the moment, and I already mentioned this in the Telegram group yesterday, is the daily close from yesterday. So you can see the 50 EMA here. That's this blue line, this light blue line. We had a nice breakout with a blue vector candle one day above it. But then yesterday, on the second day, it closed below it again. And today doesn't really look good so far either. That means for a bullish uptrend to the upside, today we definitely need another close above the 91,700 US dollar mark. Assuming that the numbers are bad again today, then it looks more like we're really going to tap into the liquidity to the downside again, and then we'll have to reassess the whole situation. That means for us, it would ultimately mean going down again, as I said, towards 88,700 US dollars, 87,000, where the liquidity currently is. Then we can try another new long trade. My short position will definitely remain open. I won't be changing anything about that. At the same time, to get back to economic data, Treasury gains, stocks set for back-to-back losses in the markets. Rob, basically it says that treasuries are currently seeing enormous gains after the US data turned out to be really, really bad, or rather disappointing. Let's take a quick look at the Fed Watch tool and refresh it. Yesterday, there was an 84% chance that we won't get a rate cut. Today, it's 86%. That means despite those terrible numbers yesterday, job openings have declined and the Fed should actually step in. The chances of us getting a rate cut haven't increased. Not a good sign. At the same time, and this is exactly what the Bloomberg article here says, we see that treasuries, or rather bonds, continue to rise. US government bonds, we're looking here at the 4-hour time frame, are still at 4.13%, and the short-term 5-year bonds are still at 3.6%. The higher we go, the higher the yields on the bonds, of course, but also the worse it gets. Japan is at 3.5%. The short-term ones are seeing a little nosedive, which could also mean that we might finally get a carry trade on the yen. So as you can see, there's a lot going on. We don't need to sugarcoat it. I'll get back to that in a moment when we move on to Forex trades. Otherwise, that's roughly the plan for now. Short-term, this is the area we're looking at. Keep an eye on 88K for potential long positions to either start a new upward trend from here or to sell off the market completely. Let's move over to Ethereum. Ethereum is just as weak. Wave 3 target was narrowly missed up here. But all right, altcoins at the moment, I've kept my hands, or rather my mouth, my fists off them anyway. Solana, perfect. It doesn't get any better than that. So anyone who caught that trade should be well in the green by now. So definitely secure your position now. Take profits. You're here. Up 3.8%. That's good. The sell zone was hit. And now it's going back down. So that worked out pretty well. Wave 3. And now we have to watch. If Solana gets a retracement here, we especially need to keep an eye on this area around 131 to 134. If Bitcoin, if it now drops toward 88K, I see Solana here at 131. That would fit. And then from there, possibly another shot at the wave 5 target and this wave 5. That target could ultimately lead us to drop down here and then grab the liquidity again at $145, $146. Then we would have wave 5. And then really a large-scale correction should take place. We have to keep an eye on it. It's still a bit too early, but according to our usual count, that would mean it's the 1, 2, 3. And right now we're in the middle of wave 4 and will then form wave 5. That's all for the topic of altcoins. XRP is also slowly entering the buy zone now, so wave 4 should be happening as well. So anyone who took the short or is still in a short position, take profits now, take 50% out, because the move in XRP, if we take a look at it from this wave 3 and the resistance line up here, was significant. 12% take profit, take 50% out, stop loss at entry. And now at $2.11 to $2.02, you need to consider whether to open a small hedge long position here. Or at least the chances here look pretty good. So let's move on to precious metals. Gold, yes, the sell zone seems to be working. We're at least seeing the first reaction, which is a good sign. The economy is weak and there is no chance of interest rate cuts. Apparently that's still the case. Gold is going to fall. Silver, same story. There too, we had the overshooting B here, which went a bit too high. The sell zone, I didn't enter anymore. In hindsight, you're always wiser, but I do regret a little that I didn't enter the position here, to be honest with you. Because this move here would have already yielded almost 6%, but yesterday it just felt too uncertain for me. And that's why I didn't enter here, and now I just have to watch and see, depending on how things develop in the next few hours, whether we might come back up somehow. Because even if we draw in the vectors here, or rather color them, we can see that we've still left one up here at 79. Perhaps that would be another small entry, but otherwise the train has left the station for me personally. But we did take shorts with us twice. Let's move on to the Forex trades. Euro, US dollar. The euro remains in the middle of the 4 range, having fallen a little further. Okay, but it's definitely still within the realm of possibility. US dollars, strangely enough, relatively strong, and at the same time, USD JPY is falling. Strange signals, but as I said, we're also seeing this from Japan. It's being expressed more and more that it's not a good sign that in the end the bonds, or rather The 10-year government bonds have been rising so massively in recent weeks and months, it's bigger than a meme coin. At the same time, the yen still hasn't really picked up momentum. That's a big problem. At the same time, US government bonds continue to be sold. Soon, they'll have to intervene here. So it's definitely a powder keg, just like the powder keg I also wanted to show you, Iran and Israel. To be honest, it's also way too quiet there at the moment. Much, much too quiet. I also expect that something could happen there at any time, which could cause the markets to act up a bit. Speaking of markets, let's move on to the traditional markets. No, I'm not shorting the DAX yet, but I suspect today will probably be the day when I'll start building a small short position on the DAX as well. Of course, you can trade all of this on BingX too. RSI clearly overbought. Let's look at the daily chart. In terms of volume, yes, there's a bit coming in, but honestly, it's still a bit too little for me. RSI overbought. The last time we were this high was basically on the 13th February, and I really don't like it right now. That's why the short will be triggered here today. Dow Jones, I'm not doing anything. Nasdaq is struggling with our huge symmetrical triangle. Yesterday, liquidity was pulled above here and closed below, which isn't exactly what I want to see. So it doesn't really show strength. Last but not least, S&P 500 still set to short. Of course, I told you if you want, you can set the thing to stop loss entry and definitely take stop loss or take profit here. I'm still short here, nothing has changed. And if the DAX joins in today, I honestly don't care about the other markets for now. So I'll stick with the DAX and the S&P 500. Otherwise, Russell, as I said, should be in the fifth wave. But there's not really a strong reaction, and apparently it's being driven a lot by retail. Even if we look at the volume down here, decreasing volume, rising prices. No, guys, no, that's not good. But all right. Let's take a look at the volatility index. Here too, we can slowly see some preparation. I told you about it in the video yesterday morning. Volatility index, basically how the hedge funds are currently positioned here. And we also see here ultimately the asset manager's net position report. Whenever we were at such extremes down here at this red line around, let's say, 30,000 to 35,000 positions, there was usually a bigger spike upwards afterwards. And actually after this, we should be overdue. And at the same time, one more thing, last but not least. This graphic, this is troublesome. Commitments of traders report, large traders, or rather the hedge funds, at least expect that something could happen soon. All right, that's it from me for now. We'll talk again this evening at 7 p.m. I'd be happy if you joined the live stream again. And otherwise, I'd just like to wish you all a wonderful, successful day. Hope you get through the day well. Join the Telegram group, leave a like and a subscription. I'd be absolutely thrilled about that. Otherwise, see you this evening at 7 p.m. Ciao, ciao, and as always, stay crooked.